Yeah, everybody positions themselves already so that when the report hits, they then make their positions, which doesn't make any sense to me. The big move that happens on the report happens because the report, and then everybody floods in after the big move in the same direction as the move, and they just all end up getting wrecked. It's normal though. Yeah, I looked at that last night too. When I was posting about the same distance out of the bottom that we went out of the top, it ended up rallying out of the top of that entire range. Um, I didn't hold it the whole way because I was too tired, but I caught the beginning bit of it into the range there. And what's funny is like the market, it popped out of the top of the range, then the bottom of the range, and that sent it out of the top of the range again, but that was considered a spike out of the top of the range. So the last thing that happened was a bottom spike, then a top spike, and then the report came along. So from a technical perspective, like we came down off of a spike from the bottom, then the top of a channel. And I'll show you here. I was looking at the spike out of the top being really the same distance as the spike that we had out of the bottom, and that was bullish and it sent it up. But I was 6:41 in the morning where it stopped running. I was like, oh, I was out of it by 4 o'clock. I couldn't do it anymore. But I should have stayed on it. It would have been an interesting one. And I would suspect that you know if I was on, getting a hedge trade for the break of that support line would have been exposure to this report. I honestly forgot there was a report last night. I didn't even consider it when I was trading. because it was so far off as well from the next day. It's just about the movements. Oh, right. Yeah, no. I definitely don't like to wake up. I don't like to wake up early, but I can stay up late. That's weird, eh? It's like I can stay up really late, but you ask me to wake up early, I'm freaking just a zombie the next day. Yeah. Where where's that? Oh wow, yeah. But you're the type of guy that enjoys daytime more than nighttime, like overall. Like you'd rather have more daytime anyways, that sounds like. And that's what you get when you wake up super early and you're done by like whatever time, and you don't have to stay up late. You can go to bed relative like as soon as it gets dark pretty much. Yeah, yeah. Yeah. Yeah, I can't be going to bed when it's light out. That's for sure. It's a bit much. But Vancouver's not north enough to really get like uh different different day structures, do they? Like you guys don't have like it's not like Alaska or nothing where the nighttime doesn't freaking end or whatever. Or the daytime doesn't end. That's what it is. They just have daytime through night a lot of the time. It's kind of rough. Must have a lot of blackout curtains. The interesting part about this purple bar here is it used to be the 61 when we did that hourly retracement. So like everything got instantly bought back up to that level, which is kind of suspicious to me. I think we're getting ready to break another downtrend. Yeah. Here, hold on 2 seconds. Yeah, it's huge. Yeah. Yeah, I still think all of it's gonna get bought back up. I put the name of the stream today, buying the dip. Yeah, yeah. Especially lately as well. There will be it's been, what we haven't had in a long time is an all day up day. Just goes from bottom left to the top right all day. No gyration down. And if it is, it's like 10 points, and it's like not enough for anybody. Just makes people pull their hair out. Mhm. No, 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 not at all. No, not at all. I did last night. I thought about you. I was like, oh yeah, I wonder, because I was like, everything's lining up, and I was like, let's take a look at the RSI, and I did. It was an interesting one. That's why I think in my picture I actually posted the RSI. It was in the picture because I was like, I wanted to see in the future how it responded, because I think at the time that I traded it, it was like the it was like the blue line was coming down to test the orange one, and it was in the middle. So it was like we were kind of doing that step that Ryan was talking about, like on top of the longer term. And it ended up holding. I'm pretty well, it ended up going up, so it must have held. I'd be surprised if it didn't. Mhm. Yeah. Mhm. Yep. Well, one thing. Mhm. 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 Yeah, I'm a huge fan of it. Yeah. Interesting. Well, I think with the RSI, one of what's up? Yeah. Yep. That's why I say, like, what you could do is like you don't have to use even half. You can use, like, you could start with two contracts and then go to half if you wanted to. And it's like you got two options. Like you can take smaller trades that you're not as certain of, but it's only 20% of your overall position, and then it's like that's calculating it. Yeah. Mhm. Yeah. What's up? Yeah, pretty much. I see resemblance of it trying to do the head and shoulders to inverse head and shoulders. I'm like, what is this crap? I'm like, literally the high with a higher high and a lower high, low with a lower low and a higher low. Like how we make a triangle now. Most common way to make a triangle is to make two head and shoulders patterns fail. Like that seems to be more common than not. Also, another thing that I'd like to see is it pop back up to the white dash line up here. That'll be a moment.
It's freezing here today. We got like -4 outside.
Oh wow.
And then we got 25 on Sunday. It's crazy. It's just nuts.
Yeah.
I had to turn the heater on my RV because I'm not getting it winterized until next week, and he told me to turn the heater on so I wouldn't fucking freeze all my lines.
Yeah.
Crazy.
It got cold down here in the Midwest too last night. A couple
Yeah.
5 degrees above freezing.
Well,
I'll take it. That hot weather's for the bird.
not like it's super hot. Like if it's 25 Celsius or something like that, it's kind of nice. Once it gets up in the 30s, like 80 Fahrenheit or something, above that, it just kind of blows.
Yeah, it was like 40 and above for like 4 weeks here. It was awful.
Yeah.
Or 100 and whatever degrees.
Yeah. Whereabouts you at?
Southwest Missouri.
Oh, okay. Okay.
The middle.
Yeah. The heartland.
Yeah.
Like we've faked out of the bottom of the triangle. There's the fake out complete. Yeah, I think I'll head back to the city after Thanksgiving probably. Start to get pretty cold.
It's a holiday for us, eh?
Hmm?
This Monday. It's Thanksgiving.
Like it's a trading holiday?
No, but it's a Canadian holiday.
Yeah, that doesn't mean anything.
No.
Yeah.
People who normally work that day will not have to go into work and could be trading that day.
Oh, okay. Could bring some volatility.
Yeah, maybe.
$60 what? I feel like we've been seeing that a lot around this time of day, actually, as well. Like I remember so many of the runs having these stair steps on top of 61s in the morning, and then it not being able to do it later because it's pushing beyond them.
red and the yellow on the volume profile. Like I got kind of like blue lines that'll extend from those two parts to make
Yep.
it easier for me to see visually. And
Yep.
yeah, I see that a lot. I just noticed that a lot.
Yeah, the developing value area.
Like it never just goes through there. It always stops there and does something.
Well, that's because it spent the majority of the volume in there.
Yeah.
Makes me think that they want to put this here.
Maybe a delay to a W here, right? It's past that yellow
Yeah.
trend line.
It reminds me of an all-in-one because it's like, oh, everybody, I'm making an M, in every single way possible. Then you got this one, and then it's like almost an M, and then this one almost an M. I mean, that one's basically an M, but when it does this and it goes into an M, it can make a W. I mean, like that's clear as day a W, and people won't even recognize the M by the end of it. It's very interesting. It reminds me of when they do a an M like that. Nobody sees the W first. Everybody sees the M. It's weird. When I draw it like that, you can see the M really clearly, but when the market does it, the smaller one, like you can see there's going to be a W inside of this M and then an M inside of this W. And it seems to be very common lately. We get this, a little crappy M, a little crappy W, and they're inside of the big W and the big M. I don't know how to stand out. Should be fine. Basically, it's insinuating that the VWAP's action. Right now, we've got spikes out of both sides of the triangle. You can have that, and then be done with the triangle. I kept it pretty straightforward. I've cleaned off every single one of the 61 variants. There's only one green dash line, and it's from today.
One minute exercise using the 15 as support. If you notice the low there at 10:07, it hit it and then it just bounced off it and went up.
Let's take a look at that. Yeah. The blue line coming down to bounce on the orange one.
That's a good bullish sign.
How's the 5-minute managed to do that? Still relatively low. Honestly, it looks like it might want to make like another test of the green before actually going. Okay.
Yep.
Um, and I wonder if that test of the green could be could happen. It's going sideways, or if it would have to come into a secondary. Because I'm like, well, if the market comes into a secondary low, do is this likely to come into a secondary low as well, or is it going to have a bullish divergence? That's the question, right? Because right now it looks like it's doing the same thing ultimately. Come down, and now it's rallying up like it is here. There's no real like divergence. But if it made a secondary low, there'd be something to look at. And this one, it did make a secondary low, and I mean, there's no real sign of that in the momentum. I suppose when it came down the second time, it was the time that it touched the. But a readjustment of the trend again.
Look at the hour side. The orange line there is just still under the blue main line. You know what I mean? So it could hit that blue line and then just come back down and force the blue line to come back down. That's a secondary low. And use it as resistance. So
The orange line is the short-term line running into the
yeah,
blue one, and that
yeah,
works as resistance here, and then
yeah,
brings it back down. I see,
yes.
I see. That could happen, yeah.
Because what happens is no surprise, but
Well, the
it
thing,
doesn't mean it goes on top of it. It has to get on top of it.
well,
But
getting on top of it would work in conjunction with the trend break, I think. Like if it breaks the trend, I think at the same time it would have to be breaking that too, or else the trend break could kind of be crap. And I mean, it could break the trend by the time it's done all of that. The 1-minute RSI is going to be through the roof, though, so it's going to be ready for a retest, and that's going to look like stepping on top of it, maybe. But that's going to take a long time to do anything on the hourly. Maybe 15 minutes. 15 minutes is more than enough time to move the 15-minute orange line.
Yeah.
Curious about that. Time is... Well, so far it's managed to just get right through this line again. It is the downtrend, but I am thinking about this one from the bottom now as well. We do have other support lines that have kind of solidified themselves, and day is still very triangular, but I can't help but notice that we do have this major move in the middle, and it does have a spike out of the bottom. And I think that just like overnight, um, with the consolidation being in the middle and the majority of the volume being in the middle, and you know this consolidation in the middle, separated by something of equal size on either side, it seems to be something that the market's really familiar with. And you can even see it like in a different kind of way, even in here, where it's managed to take this spike out of the bottom and you know put it pretty like much exactly on the top, like that. So if it's in the business of doing those things so frequently, I mean, it must be a consideration, basically, is my point. And in doing that, I mean, it's already basically way to doing that now. Let's take a look at that other chart. Yeah, it's done it. Literally completed the
Yep.
task. That's good. Almost at that B point too, keep in mind. The green zone that we're at right now can actually work as a temporary barrier with the VWAPs. But it's almost like the robots turned off at the white dash line, funny enough. But it's like they bought it up to the white dash line, which is kind of interesting. You know how that works. Sometimes that can take a long time, but today I think it's days. Gonna smash the crap out of it. But if we get back beneath it, I mean, I want to buy it back up to it. So this environment, basically at 2 o'clock in the morning, same distance in the top of the bottom of the green zone as we can. And in the morning, what that produced was a run like that. You can see we're at the other view app now. Literally, all the reports getting bought right back up.
At 261 short term. I'm just spiking through the 241.
Yeah, we're almost at, I think we're going to come back to test the 61. Gotta watch out for that. That could be the white dash line.
Morning.
Hey, morning. What a move.
Just got in. It looks great today.
Oh, yeah. $216 points. Back to the beginning. Every single last little bit of that dump bought back up.
Jesus, that's surprising.
Yeah. I did mention 914 earnings report to pop back up. What's up?
I just said that's a given.
Yeah. Yeah, and I'm like, I posted that as well. I actually put it in the non-exclusive. I think. The 188,200 is now on the table. Big W. Side of the red zone. Red zone can lead to the green zone.
I think I'm gonna attempt to actually paper trade with trading view, so wish me luck on that.
Yeah, they have a little bit of a basic um, trading thing, but it should all right for the big.
Yeah, for sure. It's just when you try to be precise, it's just a no go.
Mm-hmm.
Yeah, I've used it before. Not ideal. I prefer Ninja, that's for sure.
Oh yeah, yeah, for sure. Just I've not got like a Lilu account right now,
Okay.
so I can't really just do it right now. I'm just kind of like waiting till the middle of the month, then I should be able to get that sorted out.
Okay. Yeah, before I got Ninja Trader, I just used TradingView completely, just even trading, but I was just simming, right, and just trying to figure things out. So it kind of worked out okay that way.
Yeah, you should be able
Yeah,
to manage a stop and stuff and everything.
yeah, it's pretty good. I tried doing a pretty precise move. Found I was actually doing the currencies, I believe.
Mm-hmm.
I think it was the US and the Japan, I believe. And I saw a wick and I was like, yeah, let's go. And then it just put it in like directly below the wick. Not precise at all. So it was like, that's a bit disappointing.
Yeah, that's
Yeah, it's one
rough.
of those things.
Rough. It's interesting to see the dollar still has a inverse correlation with the Nasdaq. I remember when that started. Uh,
Yeah, I've seen that as well, actually. Yeah, it looks very similar on some of the general currencies as well.
it's like whenever they, were openly public about printing currencies or printing the dollar, more of it, essentially that made it seem like every time that they printed the dollar because they pumped the market with that extra money, that basically it was directly devaluing the dollar. And now they're not even doing that, I don't think, as much. And now when the market goes up, the dollar goes down, and it didn't always have to be like that. They made it like that. And that's what you call a Cobra effect, when they try to fix something and then their solution becomes a big problem. But it is true that these B points up top have swapped down here, and I can't help but notice how centralized and in the middle of this area is. Like we have the 61 at that green zone to the range that we're at right now, and I can't help but notice that the same distance that we went out of the top of the red zone so far would be roughly the distance out of the bottom of the green zone to hit the B points, which is kind of strange. And I question whether or not we're doing that 5-wave move that has an extra wave, because we've been doing that a lot on the short term in the morning. So except it would be in reverse. It would be more like this. Reverse. But essentially, we would be coming down for this point of the day. In the past few days, like this part right here, where we would make like a 5-wave move, 1, 2, 4, and 5, and then it would make like an extra drive. Like this one's a little bit drastic, but it still did it, which is hard. Now it's kind of doing, because we've got what is 1, 2, 3, 4, and 5, but no sign of anything but a test of the red zone, or just usage of an old range that was there overnight. And I mean, this range, it's been there since here. And how that range was formed, quite interesting that we made the same distance out of both sides of it. So such a big distance. Can't help but think we may be interested in trying to put it on the other side. It's big distance. I've done twice now, where essentially it's given us 2 spikes back to the same level. And they're of relatively similar size. Yeah, in fact, the downwards is close to exactly the same. 188-200 is not effectively doing its job. I'm curious about that we had the time that we did this. 188-200 got this grind on top of it. Everything was sold off past the 180 back to it, where effectively it did manage to down to it. Didn't hit the B point though, ironically. The people that were in from the 188-200 never got to see the point. The people from here.
This is a fine example, John, to me, of shorting. And the thing goes for like 3 points or 4 points, and you're sort of struggling with it. But I mean, if you look at where the RSI is, this thing's still going to go up, right?
Yeah.
But I'm at least expecting it to retrace at least a little bit. Well, maybe it is now, but you see how you had to sort of persist with it? There's probably 2, 3, 4 times that you had to get in there with it.
Well, this was my what I posted on it. This is kind of like my attitude towards it. The red zone is a 188-200 and can be related to the green zone below it. It seems more so than anything, So like it's really,
tiny green zone, so it's not really
yeah.
much of a distance, right?
No.
That's what you said.
Yeah, exactly. It's kind of crappy.
Yeah.
But at the end of the day, when we break the support line here, this line, it could actually trigger a 61% retracement of the entire move. But this green zone is it's like toxic, I guess you could say, to the short traders.
And sometimes too, when it's so far away from the uptrend line, it's
Hmm.
not going to come down that quick. It just isn't. And it's
Yeah,
just,
it's got so
like it's
much
going to go
time to.
sideways or something. Yeah, it's going to take
Exactly.
time. It's just time to screw people over.
Yes, exactly. You get it.
So, yeah, it's taking me a while, but yeah.
Hmm.
No, I just
Yeah,
like
I'm
to go
like, we
long
could
and
fit a
I
head and
figure
shoulders in there. What's up?
when you go long, I figure, well, okay, you got a hedge, right? You got a hedge, and then I'd be burning up my long, whatever I gathered on my long, and these freaking hedges going. struggle to sort of get into, and not really understanding the bigger picture.
Randy, were you talking about the RSI on the 15-minute there?
Yeah, I was talking about the RSI just on the what earlier. Or?
The 15-minute chart. That's all, because like we're looking at the 1 minute, aren't we? Yeah, okay.
Yeah. So I look at the 1 minute because the 15 minutes on there too, and I look at the relationship between the two, and I mean we're obviously going up right now, but you'll notice that when we're going up, the 1 minute will touch the 15 minute and use it as a resistance line, and then still continue to go up.
And the blue line's the 1 minute.
Yeah, and I'm
That's the
really
50.
really interested in the going long when the 15 minute, the orange line, is at the very bottom. You see, this morning when it was at the very bottom, okay, normally what you'll see is the 1 minute comes up and it'll go on top of the 15 minute, and it'll tap the green line or tap the 15 minute, then it'll start going up. Okay.
Interesting, dude.
Yeah, yeah. I studied that RSI for like I did nothing for like about a month or so, and I just studied the 1 minute RSI, just the RSI's period, and the 15-second RSI. And with the 15-second RSI in Ninja, your entries on long days, like if you can't find an entry, if you don't get the very bottom, there's an entry possibilities are happening when the 15-second RSI hits very, very close to the 30 or even goes below the 30 on the 15-second RSI. That's your entry. It works like a friggin' charm when the markets are going up.
Thanks for the tip, man.
Yeah, and it's like I notice it every day when the 15 minute is low. I mean, and it goes up, and you miss your entry on the very low, but then there's opportunities throughout the day, and you can usually it's 80-90% or higher probability that you're going to get a long, because it always retraces. So when it retraces, it'll show itself on the 15-second RSI. Very similarly to what it did at 10:21 this morning. If you have a look at the 15-second RSI, got very, very close on that spike to the 30 on the RSI on the 15-second, and that's a good entry. I mean, I had it earlier. I don't profess to trading in the red zone there in the volume profile, but it's just more added confluence. Understanding that indicator is freaking huge.
Oh yeah, for sure. Yeah.
Especially like when I first get on, I check out the hourly, the daily, but I check out the hourly and I find out what sort of direction we are going for the day, and then I try to go off of that. But normally when the 15 minute is low on the RSI, you're going to have an up day.
Yeah.
I
noticed that. Yeah, it's a good one.
Yeah. Yep. It's huge. And the 5 minute normally just, aligns itself in concert with the 15 minute.
And that red yellow line, that one is from the daily as well. Like this one here, well, it's more like the hourly, sorry. So everyone has a perspective on that, because it's not like a short-term one like you'd usually have. Yeah, that RSI is interesting. I was going to point out as well when you were talking about that there was a bullish divergence too at that time.
Yep.
It was like it hit that area, and all of those levels were overextended. But then, as this was coming down, this was coming up, and so was this. And that was directly counteracting the fact that everything throughout that same time period was going up on the momentum indicators. It was directly contradicting, and it's really easy for support to hold when it does that.
Well, it was like yesterday's lows, right? So those 4 spikes on the bottom.
Oh yeah, let's look at them.
There too. Yep. There was divergence there too.
Oh yeah, this one.
Yeah, the 4 spikes on the bottom or whatever, right? You see how it's lifting up on the bottom? You know it's going up. Look at the 15 minute. It's low. It's right in the bottom. We got divergence. Things are moving up, and each one of those spikes were gold. And if you go back to the 15-second RSI on the Ninja, you're going to find that each and every one of those were at the bottom.
Mm-hmm.
So just more added confluence. just helps you staying out of the middle.
Yeah. What do you point?
John, I've got a little bit of a question about the fibs.
Yeah, what up?
Um, I've been looking at them for a while. I've always been a bit confused, like how you place them exactly. I mean, I know how to get them. I'm just not quite sure how to expand them and know where to place them. If you get me.
Yeah. So like for the fib retracements, like I have like two different sets. The one that that I used for the harmonic patterns, and then there's ones that I just use for the overall retracement, where I would click the high and the low, and then I go all fibs, and I've got all of these levels where they basically, you always want to click them left to right, um,
Okay.
and essentially, basically this tells us exactly how much it's retraced into the previous move. So like if this is like 100% of the move, from the high of where I've clicked to the low of where I've clicked, coming back into the 50 would mean half of the move, and then this would retrace to 100% of the move. There you'd get 100% of the move has been retraced.
Right. Okay.
And basically, like we look for levels. Like when I change it to harmonic. Oh well, first I can go up here and see that there's other levels that we're at. And if I change it to harmonic, um, it gets rid of all those ones in the middle there. And when we get on top, we start to work with these levels. And I've noticed that many times over that if we have a move that looks like this, you know it's very easy to apply fibs to a move here, and be able to get some respectable levels like this one, that it could come back down to. Like for instance, when we know that there's like a secondary low, we can apply fibs to that high and that bottom point, and it could give us a projection for where it could go. And the 188-200 has been really, really effective at sending it back to the 100. So we always like to, in a W, we like to find um, like when we find a W, we put a fib set from the middle to the extreme, and we look for that 188-200. And that 188-200 does come back down to that 100 quite frequently. But there's certain like environments that can definitely change its effectiveness. Like for instance, right now, like you can see that in the morning, it made a W, right? And it was like, oh yeah, W, it's easy. And then it does this. It goes from the 188, and it came all the way back down to this level here. And I always I like to mark the B points, which are the 100 levels. And I call it the B point because, well, it's called the B point because in the correct drawing, like if you're to, really lay it out, you've got X, A, B, C, and D, a 5-point pattern, and that's basically, on every single W, um, this is essentially happening, and this is one way to like double check the fibs. So like you can see that from the X to the A, um, it'll have um, a retracement level. Basically, from the X to the A, it retraced 0.243%, and that's to get the B. And essentially, they're depicted in a really like difficult to use way, and I basically don't draw this in very much because it's good to draw it in if you're trying to figure out exactly what this is. Like, right here, it's a 2.083% retracement exactly, or 2.132%. And I'm like, that's so accurate that it's like hard to use almost. So you don't want to, like, it's like I know that when it's roughly in that 188-200 area, it's in danger. I don't have to wait for some precise number like that. And if it is, it's never like really identically that 200 or that 188. It's usually something that's a bit off, and seeing that number can kind of deter me sometimes. So I don't really draw these in much. But the fact of the matter is that when you look at the W, this is going to be the B point every single time. And it's like the inner part of that W, and the same thing works for the M as well. And basically, it's always going to be the 100%. And you can see in the morning how it's like, oh yeah, we went. It was like so clear. It was like, okay, we came right back to that target. It was straight from the 188,200, and just to top it off, when it pulled back there as well, another way that we like to look at the fibs is from the low to the high of that move. You can see that it came down to a 61% at the same time. Because you might be like, oh, okay, well, I can see on the last fib set that it came off of the 188,200 and it came to the B point, but it went a little farther. And it's like, why would it go a little farther? Well, because that 61 was there, and that's fine. And then what's funny is we come over here and it's like, oh, everybody see how well that pattern works, right? Look at what it's doing to people now. Same 188,200. What has it done to them? Offered them absolutely nothing. They're like, you saw how effective this pattern is in the morning, right? It's like, oh yeah, look at this level right here. It's perfect. It's so good at coming down. And then, we take that same kind of environment right here, and it's like, why isn't it come down? Because it's the same level in relation to this one. Like this is technically the B point, and you can see that under no circumstances has it ever come down to ever touch it, you know? So it's just sitting there like, hey everybody, look at how great of a target I am. I've just went down before and it was so easy, and now it's like pulling everyone's leg. So just because it's that level doesn't mean it's going to come down. And you want to know what's funny? Is people are like, oh, you know what? I saw this pattern. It was so effective down here at the bottom. You would think that if it happens even higher, it would be even better, right? Because if it's a bearish pattern that's supposed to send it down, if you have it at a higher point, you would think that it would be better. Why is it treating people like that? It's so counter to what people would think, right? It's really it's like kind of a shady move if you think about it.
It's just like the way you say it all the time. They're like, if it happened once, one time, it's not really going to happen the exact same way again.
Mhm.
It won't happen again.
Yeah. Yeah, and I start to think about it as well, because like, what we do have here now because of this sideways movement is effectively a big 1 up, 2 down, 3 up, 4 down. And if we do a 5 up, it's going to just be like another 5-wave move. And the thing that I'm like really really intrigued by is that this entire move now is a spike. Like let's look at it on the 30-minute. What's that? That's like everything that was sold off was bought back up twice now. And it's made it really difficult for anybody that's tried to remain long throughout this entire environment, because they keep pulling back and keep pulling back. And it's because we're going to break through that top line and likely produce this spike on the other side of that top line. Like,
Even on the 15 as well.
yeah, oh yeah, super spiky. Yeah, and it's like on those time frames, you can't even really tell that it wasn't the same velocity on the way up. I'm like, well, is this not the same velocity back up as it went down? I would be like, oh yeah, 100%. It looks like it did it here too. But when you zoom right in, it's like, well, that looks completely different to this. But at the end of the day, there's spikes. The velocity, they were all bought back up right back to where they began, roughly as quickly as they sold off. And I mean, this is a good example of what I would call fear is fast and greed is gradual. And there's a little bit of a representation of that. And it's like, of course, greed can be fast as well, but on the whole, if we were to look back in the history of mankind, the way that we've set things up, it's generally been a little bit quicker when things fall apart, um, and a little bit slower to rebuild them back together, which is a good way to look at it. Well,
The fact that it's not coming down to hit the B point down there has a lot to do with the RSI.
yep. And that space you were talking about, because that space is also running out as well.
Yeah.
Curious about that. And I'm like, I don't know about the right shoulder in between the left and the head. Is that going to bite the dust for one of the first times as well? I'm questioning that. But let's look at the RSI. You mentioned it's still got room, right? Or what would you say? I would say it's still got a little bit of room.
Hey, have a look if you're wondering. Have a look at the 5-minute RSI.
Okay, let's take a look.
I mean, you still have room for that thing to go down and touch, before it
Oh
goes up
yeah,
again. You know what I'm saying? So,
the 261 is also really close by now too. We're almost at a 241.
and did you look at the have a look at the on the just this move here, the 15-second RSI on the Ninja. If you
Mm-hmm.
never had an entry, there's your entry again. Hit the bottom with a
And
10.
you look at the blue line on Ninja or the other one?
Yeah,
Did
yeah,
did you just leave them default or what?
yeah. I just left them default.
Okay.
Yep.
Let's take a look here.
Yeah, 1056. That low.
Yeah, the yellow line is actually very close to the blue line. It's funny because is it always like that for you?
Yeah, it is. Yep.
Interesting.
I just treat them as one line. I'm not
Yeah,
separating them.
yeah, you didn't separate them.
No. See what I mean, though? Like, if you don't have an entry, then you have one there, and it's up like 50 points. Like, 'cause when she's going up, if as long as you know the direction that the market's going, on the bigger picture, then you're okay.
Hmm.
I mean, ideal entry. If you look at the 1-minute RSI, and if that thing comes all the way back down to the green line, uh, then that's an easy pick too. It's going to go up for a lot of points. But if it doesn't, like it didn't in this situation where it just went through the 15 a bit, then you're looking at the 15-second RSI to really pinpoint exactly where the low is, and that's your entry, somewhere around that area. And it sure
Interesting.
helps too if you see a spike. And when you're looking at a little consolidation here, like we were, the 188 200, you're not looking at any sort of major fibs here or anything like that. I mean, you could take micro fibs or whatever, but there's no real major fibs here. But it on the RSI on the 15-second, it sure was singing. That's for sure. Didn't disappoint.
Yeah. Yeah, because funny enough, when I put it on a minute ago, I put the I did change a setting real quick, and it ended up looking like this, where it has like a the other line was like a little bit longer term. I don't know if that would become useful at any point as well, because if that longer term, I changed it to like 70, and then it's like smoothed it out, because if the other line is one line anyways, this secondary line could actually come in handy as like a longer term kind of indication when they're both low, because this one kind of spikes away from it, but not for long. That's
Yeah.
another thing I'm noticing as well, is when it's far away from that other line, that could be an indication of its own as well, because it looks to be at uh pretty intriguing points that when it does get far away from that line. But I just autopilot changed it to the settings that I have on here, but there's no second RSI, and I didn't recognize how close on the default one how they are anyways, and I'm like, well, if it's just one line anyways. I'm like, maybe the second one can be used differently in a longer term kind of aspect, maybe. Take a look at it, because I don't usually use the RSI on NinjaTrader, so I'll keep it on there. See, I don't usually even use the MACD on there, honestly, but it's
Not do I. I just use the RSI on there pretty much.
yeah.
It's just
Yeah,
really
because it's such a such a small indication on momentum that I'm like, I sometimes like to see it change first on there, but it's usually I'm not I'm like prospecting at that point, trying to see if I can find a
It'll also be interesting too
station.
to know when the 15-minute is up high. You know, what does the RSI look like on the 15-second come up when it comes down? You know, when we've had those all-day down days, and
Yeah.
you know, does a reverse sort of way work? I think so, but we'll have to take a note of that when it does come down like that. I mean, it should, right? It makes sense, right?
John, how did you get the orange line on your RSI there?
Okay, so that's that is the multi-time frame RSI. So it's a CM.
Okay.
So you can get that RSI by just going here. It's this one here.
CM Ultimate.
Yeah, this is what the guy says about it himself.
Have the 2 time frames on there. That's freaking gold.
Mm-hmm.
That is gold. So you don't have to switch between the 2 time frames. You know where you are, bigger picture, and you know you're a smaller picture. So
Yeah. Ironically, he could have picked a way better example, I feel like. Going, yeah, maybe, I guess if you're just bearish. But, people going long, that would suck to go long here and just get out there.
Who's the creator of it, sorry?
Smooth says?
oh, yes.
That's for the paid
Yo,
version, I believe.
there's a paid version.
Oh no, I mean like the paid version of TradingView, the monthly subscription, I believe.
It should be a public indicator.
Oh right, okay, my bad.
You just
I
have
thought it was
to,
the one.
you can only have so many indicators on though. So we might have to take one off to put one on.
You can only have 3.
I actually have one. Actually,
Oh,
it's two
okay,
now.
okay.
I think it's two now.
Yeah, and volume doesn't count as one.
You can have 3.
3 including volume.
It changed
3
very recently
excluding
too.
volume.
Pretty sure it changed very recently.
Oh, did it?
Yeah, they're just milking it at this point, I think.
Testing the 188, 200 from the upper side. Thing I'd like to.
feel like I'm catching up on sleep this week. I don't know why. It's getting cooler and I'm sleeping a little better, I think.
That's good.
I think I have Monday off though, so I think the markets are still going, right? 'Cause
Oh
it's
yeah, yeah.
Thanksgiving.
Nice. And it's also interesting how we didn't come back to the first of the three highs proportionately. It's like, first off, we managed to make the head and shoulders with the right shoulder in between the head fail. And then the head and shoulders that failed turned into a three drives pattern, 1, 2, and 3, and didn't manage to come back down to test the first of the three. But it does put an interest on this point. The level that, yeah, could have been considered already tested, but it's the first of the three highs and could very well be the result of the break of the yellow line. The value of the break of the yellow line. And could it spike to the 261 first? It could in a last attempt to try and buy time to spend with the yellow line before coming down.
like I say here. Testing the 188-200 from the underside, or upper side, sorry, is something I'd like to see on the break of the yellow support. A hedge could be considered for it using less than half the size is good.
It's just going up, and the MACD's coming down. You know, if you start around 1034.
Take a look. Yeah, I've noticed lately that it has been the case that when we start going sideways, it's been very much growing the momentum, and in this case, it's been driving up still, even though it has bad momentum. But the bad momentum now effectively has sent it through the entire trend, so the biggest change so far, I'd say.
By the way, John, I might be able to have a chat with you later on about the YouTuber stuff like that, if you're down.
Oh yeah, 100%.
Sounds good. John, I'm looking at your YouTube stream right now. A few people have actually wrote in there. They actually asked, "How do you join?" And I don't think I actually have a link to your Discord server in your description. I think.
Oh yes, see, yeah, I didn't even.
Yeah.
It doesn't. Let's have a look. Doesn't make any noise for some reason. That's one thing I like about trading views. It goes ding.
Okay.
It's got to be. There's got to be a way. I'll up here. Let me get you a link. Hopefully, I don't get. They don't. I don't think YouTube is gonna mess with me like TradingView did for sending links and stuff, because I know I wouldn't be allowed to do it on.
I'm pretty sure it's fine.
Pretty sure it's fine. So we just hit the 261 right now. That's a relatively common level to respond to. Now it directly is associated with this level right here. We have to watch out for that. And I mean, that's way past this level. Ironically, you want to know what it looks like? The 61, and or close to it. Not maybe exactly it, but it looks like it would be close to it. And that general area where that volume really starts to happen is that 61 area. So it's not uncommon for it to try and make some sort of an attempt at that. And remember that this red yellow line's not. It's not a short-term line. Like the way that we've responded to it as well is it's got that like long-term aspect to it where you can see that it's taken a long time and it's responded to it many times from both sides and come back. Like a lot of the major moves that left this red yellow line have ended up coming back to it as swiftly as it left it, and then using it for consolidations like this one here. We've had a couple of those where it gets kind of stuck to it like that too. So I don't mind that. I don't mind that. I think that this is the last few stages of trying to get away from this line. And if you think about like imagine you were in control and you had the ability to create the most difficult trend break. How could you make it difficult for people that caught exposure to that upside move to try and sell you their position? But doing this is really, 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 really effective. Making it sideways, making it grindy, making it declined. And then every bit of advancement that there is to the downside, they take back with big jabs as well. So like just before the big attractive dump, anybody that was exposed short from in here, or anybody that caught any of this move right here, they literally just stopped them out and then went down. Not very nice, is it? But anybody that was short from that whole period, it made a new high, so really kind of screwed them over. And then kind of similar to what happened here at the end of the day, anybody that was shorting in here and in here and in here, all got wiped out at that new high. So it's like the areas for being exposed to the major dumps, there were so few. In all of the areas where it could have been shorted, the head and shoulders that play out and so on like that too, and they just lead people on and end up stopping them out. But I mean, like, it's almost like they gather everyone up in the big area that's like, okay, everybody, it's at the high, and they gather everyone up, and then they go and stop them out and steal their position for the actual dump. Because somebody's taking their position when they stop them out. And it just seems to be just enough to stop everyone out. I'm like, it's suspiciously particular that it happened again, almost like somebody intended for it to. And I was like, oh, that's really interesting. So we're really punching through the high here. You know what we might decide to do is bring the 61 up to the B point. Of course, under no circumstances do we get rid of the long trade, but just endure any kind of pullback that it decides to give. And if you are deciding to hedge it, you want to make sure that it's really tight and using half or less than the position size. It gives the amount of movement that it gives off of each controversial level. Like, that's a 29-point move. I would like to think that that's enough to make something, but I mean, I didn't take it personally, but I mean, some of you may have. After all, it is a 261, and I think we're going to see it again. I think that 261, like the 188, I think that we'll see it again. This level, I'm just going to mark it basically a gold dash line to signify that it's the 61 variant, because the 61 is the golden ratio, right? So what a better color to use. And it's also used as important. So I've kind of come to use that as a the average trend break right now. Like, our average trend break in this move, I believe that this is still the trend. Ironically, I don't think that it's really been majorly readjusted. But when I saw this the other day,
It hasn't broken my trend line, and I'm on Pepperstone.
oh, is that right?
Same point you got, yeah.
Take a look here. Wow. Good. The power of the wick and spike at the beginning of that, it's just slightly off on the other one.
Yeah, see that?
Oh, wait a second. You can move it down, I think, a minute.
Oh.
Yeah, it shouldn't be off. Curious about the levels that we have up here. As we can see that there's, an old red zone and green zone in here. And, we kind of just shot right through this red zone, which is not incredibly normal. We would usually come back to test it from the other side in this kind of environment. Gotta watch out for that. No stops are to be dragged in its path, essentially. I do admire what we did with the green zones, though. You can see we kind of, as we, came through them, we step on top of them and then stepped on top of the red zone and kind of did the same thing with this green zone right here. So basically having that kind of move, it could be the exact same size as our last red zone move. It could be a little bit more. And you know how we grinded this green zone? That could also be part of it. Just like coming back to the red zone was part of the grind. It's kind of got the same environment there. Yeah, I just thought, you know what I gotta do is for the people of TradingView, because my stream doesn't work on there, I gotta look at it or something. But when I do get it to work, I gotta basically tell them about how I restream it to YouTube, and it could be clearer if it's not on there. Because I mean, it's a service that they offer. You know, you would think I'd be able to talk about it without getting banned again. You know.
That's true. That's kind of break that, really.
I'm like walking on eggshells, man, with this guy. a hell of a move. It's beautiful.
Yep.
Got to keep in mind all of these highs down here are likely to get hit, and that's on the break of the trend. We can't get there until we break the trend. Can't break the trend unless we get to it. Means we have to close the gap. The 361 was used. Yeah, we used it yesterday twice, I think, or maybe it was we used it yesterday and the day before. But I recall it being used twice. I can't remember if it was the same day or they're two different days, but I wish I could remember what was lining up with it as well. But basically, this long trade, I intend for it to be a holder for multiple days through the entire Wyckoff sequence, and it could be a really big game changer. You know, it's like every single day, the value of being exposed to the downtrend break is relatively high. A little bit of the 341, which is really, you know, you can see it's a neutral blue color is not something that stands out. And it hasn't. But you want to know what has been working a lot is the 300 as well. Been seeing exact 300% retracements. The 300 has been notorious for bringing it back to the 261. That's one thing I do remember. Definitely reminded me of, like, you know, a squeeze-like environment. If you just take a look at, like, you know, anything that could have been perceived as bearish because it worked so effectively before. Like, let's, you know, first off, you know, the first pattern that it all started on was actually this one. This pattern here was a huge reversal pattern to the upside.
the channel in the middle, and the spikes that happen on the top and the bottom being very, very similar, effectively broke the trend. The trend tested, which is strangely very similar to the size of the spike. And then after it retested, it continued. 188,200, exact high, right? Nice. And then came down here, 188,200, exact high. Came down, came up here, 188,200 exact, not the high anymore. It gave them nothing. And from that point on, that actually wasn't the first pattern to fail. This one was. Technically, there was a spike out of the bottom. And where's this spike out of the top? I mean, we certainly made that spike, but we didn't do anything at it. We didn't come down at it. We didn't reverse at it like we did here. That's for sure. Now, of course, this pattern is exactly the opposite. The spikes are happening first out the top, then second out the bottom, and it creates a downtrend. And in this case, the spikes out of the bottom first, and then the top second, and it creates an uptrend. This trend. This trend is way more important than this one now. And, my idea for that in the morning was essentially the same thing that we saw overnight. I was looking at this. We could see that, the range was clearly in the middle, and the spike out of the bottom projected to be out of the top. The triangle we were watching on yesterday's chart had two fake outs. There's only one green dash line, and it's from today. The white dash line is the one that we're using at the close of the other day, so we'll see that on our journey to the dash line. So that, I didn't actually even mention the ranges. I did here though. So it completed the distance out of the top and the bottom of the triangle that you can see with the white markers, basically. And there was nothing triangular about that one, really. Kind of different. It also makes me want to put a fib set on here. Like the real. We're almost at that blue and white line, for crying out loud. That's crazy. Like wait, 60 is my line. Just to quickly go over this one, the PSY to the BC, PSY to the BC. It's not so far. Only got that much on. Sorry. So, all right. The PSY to the BC, and then it came down from the BC to the AR. So essentially, we've got that here. Came up to do the ST, and then essentially came down to an even lower low to do the SOW in phase B. And coming back up to the UT be the next phase, so really puts a lot of emphasis on this B point, this trend line, which can be red, yellow as well. So in this case, I'm gonna just take these off and leave this 261 as a interesting. An old chart from over a year ago. I just like to check it every now and again. I can't help but notice that we're roughly the same distance out of the top. This red zone and green zone, relatively large range, and you can tell that the red zone was acknowledged as a resistance, and the green zone acknowledged as a resistance also. Which is strange, but it's an old. I can't help but recognize the step on top of it though, the red zone at least. The distance that we have below the entire range. Counter trend move actually. From the point that we've started this move, this is like a fifth wave. Like essentially, this line starts to become something of interest. A third consecutive high on the short term. The first test of that red zone. And this red zone, I mean, it's held the high of many dumps. Ready to break it though. Ultimately, the blue and white line will be today. And what is the blue and white line if not a giant barrier that was never tested? It's like the support line to a bullish falling wedge that failed and never got back to its support. I've also noticed on the bigger fib sets, the 161s have been, like, if you take a look at all the 161s that have been holding, they've been big ones. They haven't been small ones. The small ones managed to get to the far ones, I've noticed, but the small little pullbacks, they seem to go into the freaking 300s and such now. It's like, but the big ones, they're like 160. So I wouldn't be surprised to see the 161 get a little flutter past it to hit the blue. But if it takes a little bit longer, blue could come down to it. I mean, I don't think it's going to take that long, actually. Too long. We have to think, what's the space between the price and the trend holding it up? And how much time can we spend acknowledging a barrier without breaking our entire trend? I mean, I can tell you one thing, doing the average size pullback, not an option without breaking the trend. I mean, we'd have to go all the way up to here to be able to do it, which would be the 188. I mean, that's a controversial level, sure. In the event that we get on top of that blue and white line, there's no way we don't test it from the other side, so we have to be careful about dragging stops above it. And when there is a large retracement, it's likely to get a lot of the people that are late to the. And as I said, it can be a very good multi-day hold.
We get some resistance there at the 161A, and that's where your blue and white line is.
Yeah, 161. Yep.
Makes a lot of sense.
Yeah, I posted
188,200 though is up around the 15,000 range.
Yep. I remember talking about 15,000 yesterday. what it actually. This first trend can still cause trouble. I'm looking at it coming close to trend, and getting a boost could buy more time. They might be interested in just getting to that blue. Go for that. They're trying to find a moment where they can get the people away. The slowness is definitely, and the push should stop out. The speed of the candles is really slow, so yeah, this is an ATR killer. Or even diving? No diving? Must be. The 9 though, which is still high, like relative history of mankind. 9 is high. Not lately. Been 11 every. That push. Trying to make that small time. Everything beyond this point to get to the blue white line is subject to get fixed as well. It just like you saw there, but a bit. Just makes it difficult for people to maintain a short position or retain a short position. And it's going to involve the two yellow lines that are there breaking. The one that's kind of shaded is the first one that kind of broke already, but it didn't really break. It did this. Not a break really. Like we're back above it again, and could it trigger the break of the other one is another major question. Lately we've seen that it's actually come to it and then returned back to the node, so we have to watch out for stuff like that. Kind of like a fake out of this support line, how it came down and then returned back to it, something like that. A little bit of a bigger scale as well. Could lead into a head. Potentially like a right shoulder. Or sorry, a left shoulder. Because the initial dip with all of that flooding of volume, it's actually like people chase the crap out of it. Very likely that they get that bounce back on.
It's coming off the 361, eh? To that B point down below that you had initially.
It managed to get to it, eh?
Yeah, that one there. Yeah.
Or maybe it's the one on the left.
Yeah, that's the one I got. Yeah.
What, it is this one? Yeah.
Yep. When you put your fibs on the one on the right, the one on the left goes slightly lower. The one at 940.
So did this one.
Yes.
Interesting.
I mean, it's around the same sort of ballpark, but yeah. It's kind of weird though, because we never really got any sort of response at the 261.
No.
You know, of that move. We did it at 188, 200, but yeah.
Yeah, it's strange.
Where are your VWAPs in all of this too? Is that
They're on this chart.
oh, okay.
They're down. like my longer term VWAPs that we've been using, very low, and they're changed.
Yeah, I like that higher one there because, yeah, it's all around the same point as what I got. Just put it overnight consolidation sort of thing. And
You know what we might
yeah,
get is these VWAPs might actually have to come up to the B point before. I've been noticing that a lot lately. We remember the other day when it was did that. It's quite strange how like it's almost like when the volume's ready and everything's like spaced out exactly as it should, then it's ready. And this range that we're at here, if we look at the 5 minute and then go back along this bar, how many times has it been yeah, I have reason to believe that the areas are going to become incredibly large in time. Like what I'm thinking of is these two particular times here. Yeah, it's not even that long. So like they were responsible for like huge moves from that gold zone. 243 off that basically. The day ended here. Essentially, it's managed to come right back to that controversial level. And look at what it did. It blew right through it. We're stepping on top of that. The last thing that we talked about with that level, want to get above this level and test it from above. It's taken a lot to do that, but it's a really significant level to, and it's not even from anywhere near like as you can see with the chart here, it goes all the way back to January, and the gold zone might even go back farther. Well, it does go back years essentially. Got it real. Not because that's a 61 either, I don't think. Ended it. Probably time as well. Regardless.
now when you stream on YouTube, is it delayed or is it live?
I think it's a little bit delayed. I don't think it's is it themed?
I don't know. I'm not watching it.
Uh, yeah, you just said I don't know, I'm not watching it. Yeah, it's delayed a little bit. But maybe by like 15 seconds or something. It really does put kind of a a dampener on the move when it leaves giant B points like this. Like these ones from even back here, like might not even just be the moves we're seeing here, but this entire move here, and we're only at the 127. Because, like I mentioned earlier in the M's and W's, this M could turn into a W and get us up the 188-200. Where when it comes off, it may only come down to here instead of actually getting these levels. Because when it comes down and hits those levels, it could be around the same area as that white line. I'm curious about that. Every single one of the yellow lines has broken at this point, and they're not incredible trend so far. Like right now we can see that it's trying to get involved with the low of this node. And if there was anything from the left, but there's not really. Like the two highs that happened here basically come back to test those and break them, which is pretty significant. There is a downtrend. And the downtrend, I can't help but notice it's so similar on the bottom. But it's not the same line on both sides. This line is anything but yellow, or like a blue line. An abstract line. Line can get its test from the underside. I do want to make this like two area. I want it to stand out. Can't help but notice that that is the B point here too.
Like a 227 short term. Kind of a weird fib. Very close to the bottom of the red zone on the volume profile.
So we got to watch out for the gold bar as well at some point here. This could be the secondary high that readjusts this trend so that it can actually break to the bar. We have to watch out for that now. At the end of the day, between the two lines, it is very triangular. Yeah, when I hit the back button, the indicator pops up.
What indicator, John?
The description.
Oh, okay.
There we go.
Just change the RSI settings on the 15-second on Ninja. You just right click on it, you go to properties.
Yeah, double click it. Yep.
Okay. And what did you change it to? I think it's
You can change it.
14.3 now.
I just you can change the period. Sorry, the smooth to 40, and it changes it a lot. '70 makes it even smoother. 70 is what I started on, and I noticed an incredible difference at 70. 40 is what I changing it a little bit more.
Let me fill that out in the maximum minimum.
No, just in the period.
Oh, okay.
Or sorry, it's sorry, the smooth underneath the
Okay.
14 and 40. 14 and 70 is also really interesting. 14 and 70 might actually be a little bit more responsive. It really makes that orange line slower. And I can see that it hits it a lot. Because the way that it is on default, there's not as much of a difference between the two lines, so you can't really get anything between them. And it's like they never seem to like separate or nothing. So and I only use one line for the RSI anyways. What is the other line anyway? The other line, it's not on this one at all. Just the 15,
Oh,
and then the same version, but the 1 minute.
yeah. Oh, now I got it up on Ninja. So you went period 14 and then smooth 70?
Yeah, that changes it a lot. Yeah.
Okay, okay. Yeah, does it ever? That's kind of cool.
Yeah, and the upper and lower line, change that to red and green as well, so it matches. I wish my grid lines didn't continue. Wish it. I don't think so though, actually. Put it on this other chart here. Yeah, because when the blue line has something to respond to, you can start to look at how it's responded to it. And it gives you something to actually look at in terms of how well it's, or how far it's getting from it and so on. Because there's a pretty standard distance that it likes to get away from it. Seems to return back to it quite frequently.
Yeah, I like the new combination now, the colors and on the other side now. So what does 70 represent?
Um,
Is there
well,
something?
you know what's funny is I opened this one and I thought that I thought I was changing the upper value, the upper line value to 70. And I put that in there and I realized, oh crap, it wasn't the right thing. And then I looked at it for a second. I was like, wait a second, that actually looks better than what it was like a minute ago.
It's visually pleasing. Stands out.
Yeah, yeah,
Shows the
exactly.
colors big time.
Yeah, I'm all about that. The visual aid.
Yeah.
Because like especially when, if you trade a bunch of different kinds of stocks and stuff and you haven't seen them before, you pull them back out of like way back from, a long time ago, and you might trade like, a few of them, and it's good to know if you're coming up to a red, yellow line or a blue. I treat them all differently. Some lines, like because they're colored strangely, like they insinuate that I must check where they come from, and if I don't remember why they're strangely colored, I have to figure it out. So the way that I see it right now is like we've basically made a triangle out of the two controversial lines. It's come back to test it. Very neutral thing and could be part of a very crappy Wyckoff. I can't help but notice like this kind of preliminary support in the selling climax and could be trying to what I'll post just considering maybe it wants to formulate the support and resistance lines to a channel using phase A. And I mean we do that a lot. Sometimes we don't finish the phases like we did yesterday. It didn't really, but you know, when we do the PSY and then do the ARST SOW phase B, value of the trend break after that point becomes a little, because it's the case that since the PSY we've made another 2 advancements. And I can't help but notice that you have a channel here and it came into the channel a specific way. It came in smooth last consolidation. And we haven't really seen this move yet. Let's take a look at the size of the move we have right now and compare it to the size of the move we had when we moved back. And it's like, are we doing that move? Close. Say that the volume is definitely contained within that area. I can see the major controversial area where all the volume is. For what it's left, it's very minimal. For what volume hasn't been allowed to stay inside of this area, it has been very minimal. And I remember mentioning that it could be left shoulder. It's taken a long time. It could be pattern. And the entire pattern itself doesn't even have to work. But it can form. And it can form in the unattractive way that it always does and fail. Like I'll tell you one thing, the way that it did it right now, like I'm just I remembered the picture and I was like, okay, you know when we do this, and I'm like, okay, doing that, we're doing that, we're doing that, okay, and I'm like, this area here is remarkably similar to this area here, separated by this, okay, and I'm like, all right, so very similar in a lot of ways, you know, we've got one area, you could say, and another separated by a middle area, one on top of the other, right? How much more do we need to be similar here? It's like, but you want to know what's funny? Why is it going through this point? That's not normal. And I mean, well, you could look at the conditions. What's the conditions? Well, look at how we treat 188s. Look what we did here. This movement, and it came back to an equal high. It's like, oh, it's working, boom. And it stopped. You know what that reminded me of? This reminded me of how we did the low. And then it worked from a second low and it was equal. We saw it multiple times, right? It just tried that in reverse and did not reverse. And, you know, for the people of the head and shoulders, like that formed clearly. And basically, I've noticed this as well as for the people that short the regular head and shoulders fall off level, it seems to come back for them and then go on. And I mean, it kind of does that in this where it's like, all right, you know, you can get your average price back, but that's it. And I noticed that yesterday. It's been happening. So it's like, well, that's a nice observation. And then they had the audacity to do this, right? So it's like the pattern forms and fails, right? They're like, you want to try this again here. and it actually like tries to get through the neckline. Didn't get far before it too failed. That's an intriguing thing. Now I want to talk about the M into the W as well, because like it did make an M into a W here, and it was part of a very familiar move, I guess you could say. Question becomes: is anything going to be similar had here, and the move could get? And it's such a small area that maybe, you know, I know the candles, they're not that small, but at the end of the day, for the sake of understanding, it's good to see whether or not the market's enforcing previous characteristics in this environment, because it is a new environment. At the end of the day, it's very similar to many of the major lows that we've had on the daily, where it's major movement to the downside, and essentially everybody gets riled up in that very, very long-term consolidation, and then it reverses and has like an environment that we haven't seen because it's been so back and forth so regularly. You know, and everything has been very back and forth. And I can't help but notice that, you know, one of the biggest patterns that we've, you know, been able to do, the pattern that started this entire trend here, it's been showed up here. A lot of stress on these points here. Make this pattern. Now, what's funny about that is in order to be as effective as the other ones that have worked, this would be, I'm going to take this up. But this area, that's the 188s to any of these major levels. And I'm not going to make it like that so you can have an idea. That's actually the area where the biggest levels managed to double. Like, let's have a look on the 15-minute. Like these levels right here, doubling effectively get us into that red zone. I didn't even consider this. Put a fib set on that too. That puts it for a negative response of the red yellow line, clearing all the B points from the M. Like, think about the giant W could have exposed that compensates the M, just like the short term that we had. Giant M, that move there is required to get to. There's a lot of short. That would be the B point up there. Be off of 1, 2, 5 that that it would reverse. And it would complete this pattern, which it is oh so familiar with. So must remember it. And it happens all over the place too. And it's part of, you know, what I have is 3 different types of wood. Essentially, they're all named a way that represents what they are. Me, so this one being an S wave, see it can happen both ways. You know, a really common pattern that we can see in 5-wave moves, you know, as well. But you know, sometimes they're different. Sometimes the upwards move can be bigger than the downwards move. Not always is it looking pretty. Like I kind of just saw it there as well, but you can see that in the process it's also doing ones that are even. And like I mentioned with the 5-wave move, that literally is right there. And in that sequence, you know, not always does a 5-wave move form in the way that it says in the textbook, like this, with the second wave being similar to the fourth, and the third wave being the largest, the first being similar to the fifth. And like in this case, what I find it really interesting about it is, you know, the third wave is like the same size as everything else and it meets right back in the middle. But the 5-wave move that we see there, it also happens too, you know, undeniably. It happens too. I'll show you that one here as well. 1, 2, and 5. Very similar. You know, following the same confines in the, you know, it's acceptable. The first wave looks like the fifth wave. The second wave, you know, it's a little different, but it was trying, and I'll I'll let it pass, you know, because at the end of the day, that's what it was trying to do, and that's fine. So it does that, but you can also see it does this too, where it meets in the middle. Now imagine that point met this point here. That's basically what happened in this one. So right after it just showed everyone how it works, it failed. The same process, ironically, did it differently. This is one way you could look at it. Or that it failed to do this. You know, a lot of people would look at it like it failed to do this because they only see it this way. But I have a little bit of a different approach. Like, I understand that the market does this. And, you know, I'm not just, you know, one-sided to seeing this pattern and only looking at it that way. Now, sometimes I'm deterred from it for sure. I'm not, you know, going to play every single one of them, but I do take them into consideration if they are 5 waves. Like, for instance, 1, 2, 3, 4, 5, 3 highs or 3 lows. However you wanna put it. When you get a 3 drives pattern, 1, 5. You know, that's 1, 2, and 3 highs that come down. Also got that 1, 2, and 3 lows. So it's like the other waves that I have in here as well. I would consider this one. You know, it's more predominant to have a gap in the middle. So I would consider it a wave with a gap. And it doesn't always have to meet in the middle. Work like that. Then other ones we have like N waves, where the central mean is on an angle. Like on an S wave, you can see it all meets in the middle like that, right? Well, in N wave, it it doesn't meet in the middle. You could say that it's really equal, like as a shape, like overall, but at the end of the day, the real mean is here. And the thing that you'll recognize is the distances on either side. Incredibly. Now, the mean for the wave with gap can also be on an angle too. One thing I've noticed a lot of is if it has just simply this kind of move, that mean can be seen again in the future. It's a little bit of an extra step, I suppose you could say. But let's take a look. This one here, attaching to there. Like that's actually what I just drew, ironically. Like that, getting through here and coming down. And you've got this entire, I wonder, yeah, the same kind of process is on both sides. So you can see this process on the underside of the blue line, and then you see it where? On top of the blue line, right? So it's like all about the blue line, and then it was done. right? So that's beautiful. So that's that right there. Very interesting observation. But at the end of the day, the three waves that I consider are the S wave, the N wave, and then the wave with gap. And this one, it's important to recognize the gap. So I usually draw it like that because there is an equilibrium and it is in the middle. No matter what, if it does that move or this move or whatever it chooses to do, sometimes it does that. Of course it can, and of course it has, so it might again in the future. So it's good to familiarize yourself with what it likes to do on a regular basis, especially if it's going to happen so much. You might think it's doing something else, but if you recognize one of the patterns that it does really, really regularly, then you might understand where you can fit in amongst that pattern. I can't help but notice another one that we've been seeing a lot here lately is this one, um, with a spike on both sides of a consolidation. Basically, we have a circle in the middle and a spike on the top. That same spike really happens out of the bottom, and it's separated by that consolidation. Sometimes you can see that consolidation really self-apparent, so that's cool. And I'm like, okay, what about the Wyckoff? Remember we were talking about this a little bit ago, and I was like, okay, the UT would be the next one. I still have it open. So let's take a look at this. And I've seen it just, completely forget about the rest of it from here on out. So let's just look at what it has done. From the circle that I drew originally, the PSY, we came up from the PSY, the BC, and then we came down to the AR, and then up to the ST, and then down to the SOW in phase B, and then up to the UT, and now technically it's crashing back down to test the support. Because what happens when we've done all of what we've done here? Do you notice that there are two lines, you know, one right here, and then there's also one right there and right there. So from this point that we've made right now, it has given us enough to be able to consider the support and resistance lines for the entire consolidation, debatably. Because after this point, there's no more forming the support and resistance lines, there's only testing them. So that's, yeah, along there's the support lines, the green zone, the resistance lines, the red zone. I don't know why everything had to be so black and white back in the day. And I like to represent the high of the range with something that we're familiar with, the low of the range, something we're familiar with. So it makes it obvious. Like you obviously don't want to be selling in the green zone, right? But you want to be capturing positions that offer you the most potential for reversal and for the most profit potential as well. And in this schematic, the red zone does just that. Like you can see it starts the formation of the red zone on the buying climax, comes down to the AR where it starts the support lines. And well, you could say that the preliminary support or the preliminary supply is where it really starts the development of the support lines. Like it's the first time that it responds to this initial area, kind of like stepping on it or responding to it. And you can be a little flexible with this. Sometimes it's here, okay? It's like not a huge deal. Not a huge deal. Sometimes it's down here. Not a huge deal at all, in my opinion. And I've seen that basically the main thing is it has a consolidation to be able to blast up off of and come back to. And when it comes back to it, it's doing that automatic rally, you know, and essentially it comes back up to do that secondary test, of that essential buying climax. And basically on that up thrust, it really formulates that red and yellow, or sorry, red line. So just like in that, we could see that the red zone can be created and the green zone could be created. What I like to see, the volume node, all contained inside of those areas. So you know that all of the volume that's been trading in that area has amounted to this node right here. You can see that, there's a little bit of volume in there, and that was that. But before that, you can see it's kind of not associated with our range, right? It's something else, it's that run. So since we've been consolidating, the red zone and green zone has been the appropriate confinement zone, you could say. And I'll leave that circle there just to remind everyone. So let's talk about this for a second one more time. So just phase A and phase B, and keep because that is all we're looking at really right now. It constructed it by going the bottom from the PSY to the top. That's the first move. Then again to the bottom. Test. It wasn't quite to the top, but it made that SOW and rallied to the high. That move there. I'll post a picture of that, and then we go to the hourly. See the same kind of setup that we had here, the SOW in phase B. So basically, after having come back down twice, SOW in phase B could lead to that test of the high, which in other words could look like, we've created the support lines, or we're creating them now, and resistance lines, which could mean the high of this node, are in for a test. So the exposure through the break of the blue and white line could lead to the break of the red yellow. And then we get into this phase here where it's one of the more controversial phases, because there's two schematics, and at this point it is the point that they differ. Very controversial point, eh? Because what happens after we've come up to test that UT in phase B? Like here, I'll type it in actually, why not? Type it in. And now we're in phase C. I do think that there's a really good chance we end up going through the red zone and getting to the blue bar instead of going down at all. Careful with that. Doesn't mean sell any long trades. But getting a hedge for the exposure in the event that it does come down on the break of that trend. Because in both of these schematics, this line right here is literally in danger of breaking the trend, is what it says. Spike or no spike? Third high, or not so much of a third high, maybe a right shoulder. And that red line, literally right there. And I think that there's going to be something wrong with its ability to do this break. So let's watch out. I'll post this too. Yeah, it's already giving trouble, in my opinion. So I'm going to take this off, and if you wanted to look at that more, you can always just look at the chat there. I'll leave one of these hanging around so we can get a general idea of what it could do in phase C, which is the most controversial phase of them all, because it literally it has a whole other schematic just for this phase, and it's going to fail at this point, which is ironic. Which is like, why would they pick on the people that would use something so obvious? They're just basically making it difficult for them, and typically they'll actually have a reversal that will lead them on, and it won't be much of a break of the trend. It'll actually readjust this and allow it to be able to run. Watch out for that.
Yeah, the 15-minute RSI is not coming down at all. It's just still staying up there. Just sort of triangulating, I guess.
Yeah.
See how it just wiped everybody out. Trying to catch those wicks going up.
Yeah, exactly.
I was just gonna say something like that before it did it. I said, wouldn't it make sense if this came down and wiped everybody out before they go up?
Yeah.
I was just gonna say it just sucks trading in the middle like this up top.
Yeah, it's only good for hedging.
It's very often where the 15-minute RSI just rides on top of the red line there. Basically a straight line.
Oh yeah. I think it's bullish.
Yeah, for sure.
Yeah, this line. That's the wouldn't be surprised if it went through. It's beautiful movement. Allowing for a test of the yellow line is important as well. So like it totally failed. That's interesting. Coming back to test the red zone though, just to like kind of taunt them is rough, but we're likely to do that. So it's dangerous when we get the same distance out of both sides of the range. And I mean, the Wyckoff formed enough for the range to be clear, and let's look at the other version. The other version involves it making another high. Could we be in that? Because it's clearly not this one anymore, is it? It's got to be this one. If it is, still interested in it. So does it provide, you know, when we get to this point in the same trend, right? It pops off of that trend and then allows for a break. But it is a third consecutive high that's interested in testing the first of the three. I can't help but notice that the distance that we left is roughly similar to what we had on either side. And it's like, how'd the day begin? You know, how'd the move begin? Does it want to be even on both sides? It must be allowed, I think. But whether or not it cracks the support, that's rough. I don't think that it's going to be interested in making that kind of movement. It offered, you know, a minimal kind of move downside, but actually breaking that high and getting up to the second on our table is a very, very intriguing situation. Why they would go through the whole thing and then make it fail. Almost there. You know, this could happen on the daily, you know. At 261 at the blue line. I like the idea of coming to the 188-200. This is what I said in the chat about the Wyckoff. You know, well before it even broke that level, like the phase C of this Wyckoff, I do think that it's likely to fail upwards ultimately. Having a hedge is okay, but be careful. Notice the schematic suggests a breakdown on the break of the red line. Hedges could be exposed to it, can profit slightly, but ensure to protect it quick. Watch out for another fake out to the downside. We could see one. Watch out for the difficulty for those. Sorry, but you can see the difficulty for those part of the trend break so far. Essentially, this movement right here. As soon as it broke like that, the red zone is in danger of breaking upwards. Beware of the gray bar and the blue and white line above. And I mentioned allowing for a test of the yellow line will be important. That yellow line does still remain untested, and I believe that it is part of a we essentially took that Wyckoff and doubled it in the opposite direction. So you can see we're testing the 188 200. That's the 200.
You know, out of all the stocks today, Tesla hasn't hardly moved at all, like nowhere. Whereas Microsoft and Meta really pushed the market.
Sorry, that's the blue and white line breaking. What were you saying? Tesla?
Yeah, Tesla hasn't moved at all today, and they're saying that well, right now, Meta and Microsoft have already moved the market in a big way.
Interesting. We'll take a look at them here.
Just
In a second.
just on the prices and stuff.
This is an idea I put in there to show what's up. You can click the play button on it too.
Just on the hourly with the that's nice.
Yeah, yeah,
Wyckoff, okay.
yeah.
And it says, I've posted the picture of a full Wyckoff schematic on the top right of this chart. Notice that we are currently at what would be considered the sign of weakness in phase B, SOW in phase B, and could rally to the high of the range on this trend break. You can see the support of the entire consolidation can be formed off of the point we are at. Phase, like we were doing with the green zone earlier. I could have done that in that actually. But however, phase A outlines the support and resistance, and it formed accurately, as you can see. The remaining points of the schematic are definitely to be considered. However, the market environment has been known to form phase A very clearly, and other points and phases sometimes can seem exaggerated or falter in the following phases. So I'll be watching for common similarities with recent Wyckoff playouts in the short term as well. I'm going to reply with a picture of what just happened here as well, to like comment on this picture of my stuff as well. And notice the arrows pointing to the blue and white line. I'm very interested in returning to it in the short term. Readjusting the position size at that time may be of interest. A break of the red-yellow can invite a retest. That's we already did that this morning. And this could be part of the relationship with the blue and white line. And although the current point in the schematic suggests a move to the upside, the entire pattern itself is known to reverse momentum and break the entire existing trend on phase E. In this case, this is a daily chart and can mean a very long-term process, so it can take some progress through the phase to get to phase E. I will consider the phases as they form, and I encourage you to track this one, basically, what I put in there. And I'm gonna can I just put a picture? Interesting. Because on the daily, we look at it like this. I can post a picture of that as well.
If it's anything like what we just did in the short term, this entire blue line does not stand a chance for very long. Any hedges that have been made off of it swiftly. We can see that it came down to exactly what it should come down to, 188 from that. And it came back to test that. That's all it's given. And it didn't give anybody anything off of the one either, which is kind of what it's been doing. It also gave people back the 161. It's funny how that works, you know, because how it's using this 161, exactly the opposite of how it was using the more recent one. Definitely acknowledging the blue and white line though. Good. The entire support line. I do think that just like we had a channel up, we can have a channel down, and it can double down too, but still not really amount to much movement, which is ironic. Kind of movement right here, this kind of channel right here, it is counter to this one, and just like it doubled, it too could double down, but that could only mean here. Yes, it brings me back to the idea in the morning of this being a left shoulder. I mean, at the end of the day, you could form an entire head and shoulders here and not end up laying it out. But it could involve getting back to that point. I'm curious myself to see what it treats that support like. Line is very, 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 very suspicious to me. It's really good at being in equilibrium. And it's the yellow line that I mentioned we might have to endure a retest to. This level right here is also something that could be like somewhat of a short-term barrier. That range I just took off there could use confines again. May even be now. Curious about that. Because it is one of the ways that it has pulled back in the past. And basically just like we had the blue channel, now we can consider this red one and its impact in making a head and shoulders pattern. I expect the pattern to fail ultimately upwards. But having a hedge for its formation is okay if you took one on the blue and white line. And it's at the end of the day, you must make sure that it's very, very safe. Continue holding if you do. But the exposure could be relatively great on the long term. You know, like it's worth making a position safe to hold. That's all I can say. See that triangulation going on here.
Yeah, I just retraced up to the 50% mark there, short term.
Yeah, kind of like an M into a W trying to form there. W's Foreman. The W is playing out to the B point basically, and to the medium line, which is subject to breaking soon. Looks like it's finally trying to break the red line. And it's likely to take back the majority of the move to the to get to the blue and yellow line. I think that's a pretty normal level. It could even start the right shoulder up on that level.
What are you thinking? D-leg to an M here, John? Or?
Yeah, ultimately. I do think that it might try and make a right shoulder like pattern, you know, like to a head and shoulders, but then it's subject to failing into like one of those M's that looks like a W. I think we might see that again. It's been quite common. And it could fit pretty appropriately if it tried to work on that M and then turned it into a W somehow. That could be on the table.
Since that blue and white line has been pretty relevant,
Mm-hmm.
can you explain again where do you get it from and what it represents?
Oh, 100%. Yeah, the blue and white line, if I go to the hourly, it's like this falling wedge. And like
Right.
it's basically, it comes from this giant M, and it's never ever attempted to ever even test it until now. And it rings a bell on this one too. Like that level up there, we haven't hit any of these B points up here. And the trade could definitely get up into those levels. So I think it's actually a pretty huge trade, and it's looking pretty good.
Yeah.
I think whatever we do off of this blue and white line, you know, it could be hedged, and we could continue holding, not having to try and catch the middle when it comes. You know, if it comes down harshly, it won't really be low, and that's the irony. It could even come all the way back down to this gold bar, you know, which would be the B point right here. So allowing for that B point to get tested, you know, even hedging towards it could be a really good idea. And I look at this area and I'm like, okay, we moved out of the top this much, and that's roughly the distance of the previous consolidation. Doing it underneath wouldn't quite be the gold bar, but I wonder if we get a bit higher, if we could make it even on both sides. And the B point from that, or sorry, the 188 from this B point would also be up in that area. I'm thinking we might be able to get to it. That would be up in that red zone up there. Yeah, it's quite interesting. It's crazy how, you know, we can get to a phase C and it doesn't do either of them. It does the exact opposite of what it's supposed to do. But it was clear that it was going to, at least. I'll be right back. So now we're stepping on top of the green zone and the blue and white line. You know what's funny? Is the red bar, it'll still play out in time, just from a farther away spot most likely. I find it still very relevant though, although it's very far from breaking out from to the downside because its support line is very far away.
We haven't had one of these in a while.
It's so funny because if you look back in the recording, we were talking about it in the morning. Just the fact that we haven't had an update, all-day update in a long time. Man, it's crazy down here too with the grocery stores, man. I don't understand how they've been doing it. Like you can get 3 sirloin steaks for freaking less than $20.
Oh, that's pretty good.
I know, right?
Is that AAA? That's good stuff, or?
Yeah, it's good. It's good. It's like really tender and everything. I usually like to get the Amish stuff, but that's a pretty good deal, and they're good just to have them, freeze them and stuff like that too. It's some sort of strategy they have. I wonder if I should, if they can tell that I'm the guy that's buying them. I just go in there and buy all the deals, fill the fridge up. But basically, I don't know. I feel like if I spread it out, they might think that their strategy's working a little bit more. Because it can't possibly be working if one guy is buying all of the deals. Nobody else is going to be getting them, really. Well, I mean, I don't buy all of them. There's so much there, but I get some really good ones. They're like $18 and stuff like that. I'm like, holy smokes.
Well, those are good steaks too, right?
Yeah, they're good. They're good.
Yeah.
Not bad.
Around here, we go to Costco to get the best steaks.
Really? And
They're really good, but they're really thick, so you got to cut them in half.
yeah. See, I don't actually like them when they're super thick like that. I feel like you can get more flavor when they're amazingly thick.
I mean, I just can't eat a big, huge steak like that. It's just like, I don't know, 16 ounces or something.
Yeah, that's
Each
insane.
one of them, it's huge.
Yeah, I feel like they take a long time to get to perfect, but it is interesting. I usually make roasts and stuff. I tried to make one on the barbecue the other month, and it wasn't too bad. Yeah, because they do smaller ones.
We put our roast on the frying pan, brown it, and then we just put it in the pressure cooker. And
Oh, nice.
Juicy.
I know.
It's awesome. Yeah, like one of those pressure cooker type, slow cooker type things. Barbecue steaks last night, but it was just way too cold outside, and it just takes too long for the barbecue to warm up. So they'll do it this weekend though. We got nice temperatures, so be nice.
Yeah, I wonder how it's gonna be this year. If it's even gonna, get cold at the same time it usually would.
Yeah, here I know it's gonna be cold. I just don't know how long it's gonna be cold for, or if we're gonna get much snow. Because last December we kind of froze our asses off at -40, -30, and then January, February wasn't too bad.
Yeah.
this weekend for my trip out to Vancouver Island. So it'll take all weekend to unload the rig and friggin' put things away and do laundry and all this other crap.
Oh yeah. You'll be busy then.
Yep. I'm getting the yard ready too, because we have to shut that down, put all the crap in the green machine, the garbage and shit like that. Mow the lawn, yada yada, you know.
Yeah, you must have something that you can sit on, no?
No, it's not that big of a lawn, so we just friggin' push the lawnmower around.
Oh, church.
Yeah. Last weekend, John, or what? Just getting ready to pack her up, or what?
Yeah, well, I'm thinking I might do something for Thanksgiving, and then I'll see. I'm gonna see what everybody's doing, and then maybe do that, and then head back.
Do you transport all your stuff back, or do you just like use somebody's truck or something, or?
Yeah, or an Uber or something. It all depends.
Yeah.
Only one time here, really. It's whatever's the most convenient, really.
Yep.
marketing name.
That was way too good.
We're breaking through the high of the range and in the red zone now. Essentially, not much was given off the 188. The 261 is the beginning of the red bar as well. Can't help but notice that the next fibs on the regular scale are the 241, 61. Yeah, the wicks and spikes here directly threaten a return back to the red bar. It's pretty intense that the yellow lines below are actually threatened by this movement. The red line as well becomes of interest again because it still technically holds. Everything below it has been wicks and spikes. Just about hit the 260.
And it's at 15,000.
15,000. That distance. We haven't seen it exactly, but been around in other controversial distance. Having some sort of pullback. It reminds me of the 188 at the beginning of the day that only could pull back to the green zone. Similar to this, I'd say. This distance that we used earlier could also be of course at a let's move it times actually. So we've advancing, looking at the counter trend moves, the advancements have actually had similar particulars spike. It's trying for the bar there. The initial lunge gets chasers. Typically fight back on the chaser. In this case, it might be a little bit choppy to me. A lot of the moves have to make our average triangle. Kind of move. At this time in the previous triangle, it did. A little bit downtrend. That same downtrend. Oh yeah, sorry. I was just looking at that real quick. Got the 261 that's never been tested from above. That's interesting to me. One of the next moves actually be. We haven't seen that in a relatively because of the size of a red zone. The only other real one that's managed to form from one side to the other tries to formulate again. That could look like testing the white line. At the end of the day, keeping this pattern one side to the next outside of a channel, it creates an uptrend. The red line can work as that uptrend for now. And it's coming up, so I'm curious to see if it manages to break it swiftly this time, because it's been like 4 or 5 times that it's tried. And I think it's appropriate to come back and test 188 200. That could be part of it. Kind of reminds me of the tip of the triangle, but basically trying to rival the break of the red and the yellow. the other side of the range now. Basically similar to the red line is somewhat likely to make a attempt at trying to test it from the over that. Of course, in the process, it's grinding the 260. can see we tested the red zone under line essentially. Nothing crazy, but Almost done with the consolidation.
Yeah, I think we're still going to be going up here even after the hours.
Oh yeah, definitely.
I just checked out Microsoft too, and they're only at the 161 right now. It's one on the hourly, yeah.
Looks like the 61 of it.
No, I just went on the hourly and I just having that middle one as a B point to a W.
Yep. Yeah, that's very similar to the Nasdaq got to the 188 of the major dump in the morning.
All day.
What's up?
I'm just saying it's an all day up day. It's just been going up the whole day.
Mm-hmm.
Left to right.
Like it has in this chart, could carry on all the way from here to new highs altogether. That's the entire downtrend up there. Ways away. So it's more testing of the red dwarf. They pop off the red zone. We have to think of the centralization for the imbalance now. Threatens to get back underneath the blue again. Bar. See, we're also like making it even on both sides of the one. Balance in 5 minutes. Any hedges made towards the imbalance, I make sure they're made safe. Thirty seconds to imbalance. Not much of a move. See the head to head and shoulders though. That may lack the right shoulder or form it in a different spot. That is most likely, I'd say. It's like a neckline. Might forget to make the shoulder. The gold bar. Getting that right shoulder. 5 minutes till the close. Testing that gold bar from the undersides on the medium line. The longest time. But not so much anymore. I also want to point out that this tested the 18800 from upper side. Yeah, no, I was just taking a picture of that. The end of the day, I'm looking for that green and red bar basically on the break of the entire channel, but it could get to it by going sideways. Basically, this is like an attempt at the test of the blue and white line, because effectively it ended up going way above it, as we can see, and I think that that's going to lead into this pattern continuing into the B points and such tomorrow. So we have to start looking at the break of that major downtrend. It may even have a negative response to it when we get to it, so we'll have to be watching for edges and so on. But hopefully you guys had a wonderful day, and I'll catch you guys later.
Yeah, appreciate it.
Yeah, anytime.
Nice weekend, guys.
See you somebody.
Yeah,
Bye.
take it easy.